Welcome back. Federal Reserve Chair Janet Yellen taking a positive tone yesterday despite the disappointing jobs number out on Friday, showing that the U.S. economy added only 38,000 jobs in the month of May. While speaking at the World Affairs Council in Philadelphia yesterday, a widely watched speech, the Fed chair offered no guidance on the timing of higher interest rates, but she said that policymakers are still planning to raise rates gradually. Joining me right now is former White House Director of Economic Policy, Todd Buchholz. Todd, good to see you.
Good to be with you, Maria.
Thank you so much for joining us. A lot to talk about, and I want to get into your new book. But first, Janet Yellen. Did you hear anything yesterday? What struck you about the speech?
Well, it wasn't all that interesting a speech. She certainly did not emphasize that, that lackluster jobs report. Look, the Fed really messed up at the beginning of the year. They raised rates in December, and then they said, we got 4 more to come this year. Well, that was wildly optimistic, and as soon as they mentioned that, all the data started coming out to be flabby. And now I have to tell you, I'm a little worried that the automakers, who had actually provided some level of vigor in the economy, are now reporting softer sales. And then the retail story, obviously Ralph Lauren this morning, doesn't give you much confidence.
Well, I mean, part of the issue, I think, is that we keep talking about the potential for the UK to leave the EU. Aside from the Fed, you've got Britain's vote to leave the Eurozone as a risk for the markets. Everybody that we've spoken with on this program has said the same thing, that if they vote on June 23rd to leave the EU, that the markets will get disrupted. What's your take on that?
I think that's a little exaggerated.
Really? So you think they should leave?
Well, it's a good question. I tell you, one of the themes in my book, which you'll get into, I'm sure, is this rise of nationalism.
Right.
We see this with Donald Trump. We see this with Great Britain saying, you know what, we're our own people. We're our own nation. Why do we need Europe? So what is going to, of course, the pound will sell off, but does that mean that companies are not going to be buying Rolls-Royce engines for Boeing jets or Airbus jets? I don't think there's going to be a strike by Europe against buying British goods, so I don't think the downside is quite as bad. And remember, when the euro was created, there were plenty of people who said because Britain was not in the eurozone, the city of London, all the hedge fund traders and all the financial industry of London would flee London for Frankfurt. That didn't happen.
Right.
So Britain's been apart for quite some time.
And let's not forget that the UK decided not to join the euro. And they kept using the British pound, and that was a really smart move because obviously we saw what happened with the euro. But in your book, the book is called The Price of Prosperity. You say that there are key forces that tend to bring down great economic superpowers like the United States.
Well, if you look in the past, the Ottoman Empire ruled much of Asia. The Habsburg Empire ruled most of Middle Europe, and they are gone. The Spartans, we think of the Spartans and those heroic movies. The Spartans got defeated. Well, it turns out, and I discovered in my research, there's certain themes that show up. When countries become prosperous, they start undermining themselves.
Right. So don't get complacent in thinking that the U.S. is going to be the dominant international player. They may very well lose it the way Rome did, the way Britain did.
Well, that's right. And I kind of wonder whether there's increasingly numbers of people in America who don't really care whether the country persists, because we now live in this global international world. You've got schools that instead of starting with the Pledge of Allegiance, start with a pledge to the world. You've got protests where people wave Mexican flags in America. These are the sorts of things that would have been unheard of 40 or 50 years ago.
So characterize this election season and connect the dots for us in terms of the price of prosperity.
Well, this election season, what do we have? Bernie Sanders is going to be out. He should probably move into the Playboy Mansion with 90-year-old Hugh Hefner.
Oh my God.
I mean, Bernie's merely 74. He could be the pool boy for Hugh. Well, no, we don't want that vision. Look, so you got Hillary Clinton, who most Americans perceive as a liar.
Yeah.
You got Donald Trump, who speaks his mind, but the problem is what's on his mind is kind of loopy.
Wow, Todd, you laid it all out. Todd Buchholz, congrats on the book, The Price of Prosperity.